Hello everybody, welcome back. I made this video on the weekend and I wanted to remake it because I kind of went in a bunch of different directions, but this is my new Forex course and I want to go through it and kind of give a more detailed explanation of exactly how you can start using this tomorrow to start making money. Now, if you know anything about me, I've been trading for over 35 years. And by far, the hardest market to trade is the currency market. And I'm going to go through, first of all, the reasons why it's hard, and then I'm going to go through the advantages of why you should be trading it and could be trading it. But let me tell you that it's been a long love-hate relationship with me with the Forex market. There are times when I've made money with it, but more often than not I've lost money with it. But I think after all this time I finally found an answer and solution to it. But in order to understand how you're going to be able to make money if you follow this course, you have to understand the limitations and the advantages. So we're going to start off with the problems with the Forex market. Okay, so the main problem with the Forex market, it's a very tight and small ranges. 1% a day is a big move in these markets. So I'm going to make a very bold statement right here that most of you are going to probably have a problem with, but I'm going to prove it to you with math because the math never lies. 88% of the time, the Forex market is random. Okay, now I said I was going to prove it with math, so here we go. Watch this. Okay, so what you're looking at here is what is called a frequency distribution sheet. And what I've done is I've punched in a year's worth of data on the euro US dollar, the current price, the high, the low, and the percent change. And then I've asked the spreadsheet to tell me during the last 12 months, how many times did it move from 0 to negative 0.25, 0 to -0.5, 0 to -0.75, and 0 to -0.25, and obviously the opposite side. And what we come up with is we've come up with this bell curve and this distribution. If you're trading the Forex markets, you should send me a gift right now because this is the most valuable information that you could ever understand. As you can see here, 80% of the time, if not 88% of the time, the market does not move between 0 and -0.5 and 0 and +0.5. And only about 12% of the time does the market move -0.75 or -1% or higher. Let that sink in, guys. This market barely moves. This is math. Okay, the math does not lie. You must accept this as reality. If you do not accept this as reality right now, I can't help you. Okay? You're doomed. You're doomed. Now, if I look at other assets like the GBP, you can see it's a little bit different, but not that much. The one that does move the most is the Aussie dollar, and you'll see that we get some fatter tails on the Aussie dollar here, which means the Aussie dollar does have a tendency to move 1.25% or higher. Math. Statistics and math. Now, a lot of you are going to be very disappointed by seeing this math, but that is the reality, okay? Whether you like it or not. Now, what that means is that about 12% of the time, the Forex market will trend in one direction past 0.5% or higher. 88% of the time, it's range bound and mean revision to 0.5% high and -0.5%. Math never lies. Okay? So Why is that a big problem? This is why I've always struggled with the Forex market. Because if you have a market that's very random most of the time, it's extremely difficult to place tight stops and get the right R to R on your money. Right? And that is why I have such a hard time trading the Forex market. With stocks, I can get much bigger moves and I can place very, very tight stops because the ranges are so much wider. If you take a look at a stock like Tesla, for example, it's going to be in a range of somewhere between, 2% to 5% is normal on Tesla, right? So with the Forex market, you've got a market that barely moves 1% a day. And it's very random in its gyrations between negative 0.5% and plus 0.5%. Think about that. Think about that. Think about that. Now, those are the disadvantages with the Forex market, and this is why I've had such a hard time trading it, because placing stops, at least tight stops, becomes an extremely difficult task. You're just going to get stopped out a lot. Okay, so we've gone through the bad things. Let's get to the good. So what are the advantages of the Forex market? Well, the major advantage that you have with the Forex market is that most of the volume and transactions happen during London. Now this is really, really, really important, because if most of the transactions happen during the London session, it kind of gives us a blueprint that we can follow during the New York session, assuming there is no significant news that would change the order flow of the London session. Okay? The other major advantage of the Forex market, and this is the whole thing with this course, is that VWAP, or volume weighted average price, or any strategy that is mean reverting strategies work very well in tight range markets. Okay? And I'm going to explain why VWAP in particular works extremely well in the Forex market. And the main reason of that is because 90% of the Forex volume is done by 10 banks. I'm going to repeat that. This is another reality that a lot of you are not going to like hearing, but it's a fact. There are 10 major banks that do 90% of the volume every day. And VWAP, if you know anything about it, and I'll give you a brief explanation of what VWAP is. VWAP is an instrument that was created so that institutional traders could be measured against. In other words, if you are working as an institutional trader and you get a very large order to fill, whether or not you keep your job is going to depend on the fill that you get in relationship to the volume weighted average price. Let me repeat that. Whether you keep your job or whether you get fired is going to be related to the fill that you get for your large institutional client against the volume weighted average price. And I'll show you some examples of that in a minute. So the advantages that we have in the Forex market are threefold. Most of the transactions happen during London. What happened during London, you can expect that price action to continue unless there is significant move. And mean revision strategies work very well in range-bound markets. Okay? So, really, if you're not really understanding what I just said in these 9 key points, please go back and rewatch them, because it's really super, super critical to your success. Now, let's get to some examples. I'm going to show you how knowing the facts and knowing the statistics and knowing the characteristics of this market, we can now profit from it. Okay? Okay. Now, as I mentioned to you before, I have a love-hate relationship with the Forex market because of what it is. It's so predictable in some ways, but it's so unreliable in other ways, okay? So the strategy we're going to basically use is, first of all, what I have here is I have a VWAP with 2 standard deviations on it. You can find this as a free indicator on TradingView. I don't think MT4 has it. You're going to have to get something custom built, but TradingView has it. You just simply go up to indicators, you search for the VWAP, and it will be there. The other indicator that I have on here is called the Forex session, and this is the this is the open of the New York session right there. Anything before that is the London and the Asian session, and the New York session is highlighted. And the other tool that I like to use is this custom indicator. Now remember, we looked at those statistics that said that the Forex market barely moves. This is 0. Let me just take these off for a second. This is the 0 line, meaning that's 0% move. This is a 1/4% higher. This is a 0.5% higher. This is 0.7% higher. This is 1%. This is a 1/4% lower, negative 1%, 0.5%, negative 7.5, and 1% lower. This is the custom tool that I use. If you want this, please email me and I will give it to you. Okay, but let's put the VWAP back on. All right. So the basic strategy is that whatever happened, whatever the order flow was during London, is most likely, unless there is significant news, to continue to happen. So what am I, and I'm particularly looking for pairs that are not trending, because I want revision to the mean. In other words, I want to be using the VWAP with these standard deviations to trade from one standard deviation to another standard deviation, or even better, back to VWAP. Okay? So I'm going to give you some examples of that. Coming into today, I saw that the Aussie US dollar, is that what this pair is? Start with the pound. I saw the pound was, if we put this up, you can see the pound went slightly higher, came down to 0.25, and why can't I see that? For some reason it's not there. Where is my Forex session? There it is. So you can see the pound was very rotational, meaning that it wasn't trending. Okay? So this was a really good strategy to me, because if I could get down to this level down here, revision back to VWAP was going to be a very good trade. So the pound was number 1 on my hit list today. The second pair that was very range bound was the Canadian US dollar. Again, I'm looking for pairs that are not trending. Now this will work with trending markets too, but we're looking for pairs that are not trending. So the Canadian dollar, unless there was significant news, was very rotational, and I was looking for it to continue that rotation. The Aussie dollar was my third choice. The Aussie yen was my next choice, and the Aussie CAD was my final choice. Now remember, we're looking for revision to mean strategies, which means we want the pair to go down to 2 standard deviations of VWAP, come back to either 1 standard deviation or VWAP, or even better, the other standard deviation. Okay? So let's see here. Now I have very specific rules that I'm going to teach. This is just the free version of a course that I'm currently offering right now. If you head over to my website, you'll see that I've now offered my Forex VWAP course, where I go into great detail of exactly what you should be looking for. This is the free version of it. You can go and try this on your own, and hopefully it'll work for you. But for $4.95, you can get the full version of exactly all my rules that I use to trade this. So in this particular case, we're looking for a revision to VWAP or beyond on the pound. There's our first target, and there's our second target. Now this went all the way to the other side. Now you could even take a trade up here. Okay, now there's a reason why I wouldn't take a trade up here, because my rules were just for one trade on this between 8 o'clock and 11 o'clock, and I don't like to trade this past 11 o'clock because that's when the London market closes. Now I probably would not have taken that trade at that high, but you can see that the trade did hit that band and come down low. 2 winning trades on my number 1 choice of the day. The dollar CAD, again, we're looking for rotation. Boom, hits target 1, hits target 2, target 3. And again, the reason why I wouldn't take another trade short here is just because of the time of the day was London, and I wouldn't have done that. Okay, but it works. Check that out. Okay. The Aussie dollar, which was my 3rd choice on the day, actually the Aussie yen was my 3rd choice. It gave a trade right here. That one failed and got stopped out, but it gave a second trade right here, and that one ended up making back all the money. Now it didn't go all the way down, but I closed that trade at 12 o'clock because that's one of the rules. So 1 loser, 2 winners on the Canadian dollar, 1 winner on the British pound, 1 loser on the Aussie yen, and 1 winner on the Aussie yen. Alright, now if you like what I've shown you so far, and you want to know more about this strategy, and you really want to trade this strategy, I'm even considering opening up a live room to trade it. Okay? Now, these examples that I've given you here are for rotational mean revision trades, but you can also use this strategy to trend trade. Okay? And I'll explain that strategy in the full course. I hope you guys like this, and I love you all. And head on over to my website, buy this course. If you buy this and I open up a room, I'll give you access to the room for free. Okay? Thank you. Bye-bye.